Welcome everybody to OBIC's Insight series on open banking. I'm your host, Michelle Beyo, CEO and founder of Finavator, and also an OBIC board member. I'm really excited to be here today to share with you our new episode focused on personal finance and open banking and how important that is to Canadians, people in the UK, and all around the world. We're going to focus today's episode on early stage FinTechs and how they're enabling new tools for consumers to save money. And this is such an important feature, in fact, at the moment, as you look at Canadians, even prior to COVID, 50% of Canadians were $200 away from insolvency. This is a really scary fact, and there's so many new tools out there to help people in managing their money. And I think with COVID and debt accelerating, today's discussion is so important. So I'm really delighted to start today's discussion by introducing our series moderator, the Honorable Senator Colin Deacon. He's an independent senator from Nova Scotia, but he's also got an extremely unique background in entrepreneurial businesses. And we're really happy to have him here because he's very much focused on consumer data rights and innovation. Thank you for being here, Senator.
Glad to be here, Michelle. Thanks.
Also really excited to introduce our Canadian entrepreneur, Ramy Nassar, who is not just an entrepreneur, but also an engineer and an AI expert, which I'm sure you'll learn in this episode. He is the Chief Experience Officer and co-founder of Olive, as well as the founder of 1,000 Days Out and the former head of innovation of Maytel. Thank you for being here, Ramy. Also, we have our UK representative, Oleg Mukhanov, who is the COO and CFO of SteadyPay, an extremely important UK FinTech. His experience as an investor, as well as a track record for venture capitalists and private equity and investing in bank industry. Prior to his role of managing director of OM Capital Advisor, as well as the CFO of Enso Ventures. So happy to have you here, Oleg.
Thank you so much for having me, Michelle.
So I'd really like to start today's episode by asking Senator Deacon to give his thoughts on how important personal finance is for Canadians.
Thanks, Michelle. I'm really glad to be here with Oleg and Ramy. Actually, the thing that I'm really excited about is how those who are involved in creating new businesses, taking an idea where they see a really important need for customer value to be created and turning that into a business. That is for me one of the most exciting parts of the whole process of building a company, because how do you really quantify the value you can deliver and figure out how to find the customers who are willing to pay to get that value and the best way to distribute it. And we've got a B2B business to business, in a similar space to one that's B2C. So I think there's going to be really interesting business to consumers. So I'm going to be really interested in seeing and comparing and contrasting where they're going on this. But there is no question that COVID has made those who were already financially precarious even more so. And so the need for us to find creative tools that allow people to rebuild their lives when their savings and their income have both been negatively impacted for a significant period of time requires creativity and a new way of looking at some of these problems. And so this is an incredibly current and important topic from my standpoint, and I just want to get into it.
Wonderful. Well, let's start off with a question in regards to how your organizations have helped Canadians and consumers in the UK to really manage and have the ability to really look at their finances in a different way. So tell us a little bit about both your organizations. And Oleg, can we start with you?
I would love to. Thank you, Michelle. So SteadyPay is first of its kind income smoothing application for gig economy workers. And by saying gig economy, we're talking at about 50% of UK economy and workforce who do not have a fixed monthly paycheck. And the problem with those people is that they have a lot of volatility, but not much of the safety cushion, meaning that when they do not earn enough in the period, they have very little they can do and have to resort to payday lenders and alternative high interest providers because they cannot access traditional bank loans or overdrafts at fair terms. So we're actually providing them a fully automated and fair alternative, which takes out all the guesswork of finding and getting the solution. And we're doing it using open banking. Using open banking, we make our own view about the credit worthiness of our customers, looking at their transactions. And this way we can actually provide them real-time fully automating lending solution, helping them whenever they earn below average, and they repaying us only when they can afford, which is above average. And we're doing it with a twist. We do not charge interest on any other fees other than fixed weekly subscription fee. So what we're trying effectively to do is to offer Netflix for credit for the consumers.
And Oleg, just as a clarification, I mean, I loved the business model when I saw it, but one of the things I wondered is can somebody, when they realize they no longer need the service, if they get to that point, once they've paid off the loan to your organization, to SteadyPay, they're good to head off on their own?
Yep, that's exactly what set us apart. There is no minimum period which you have to use. So at any point, if you are ready to go on your own, or you got a new job, or you've got more financial stability, you can always repay whatever is outstanding and unsubscribe. There is no minimum lock-in, and that's what people like. Full flexibility, full transparency.
It's a fundamental shift, absolutely fundamental shift from the payday loan model. And I just, it really captured my attention, especially with the growing percentage of gig workers in our economies globally. And those, I mean, precarious work is going to be, sadly, for so many, the standard, not the anomaly moving forward. Ramy, I'm just wondering if you could talk a little bit about Olive, and 2-year-old company based in Kitchener-Waterloo, as I understand it, and you've got a different model, B2B model, but a similar space that you're working in. Can you describe it, please?
Sure. Yeah, Olive really is meant to be a B2B approach to card linking, which is to say creating both cashback offers on top of credit cards, as well as the ability to round up transactions to save for something big. That something big could be retirement, it could be a rainy day fund, it could be charitable contributions, it could be a down payment on a card, whatever it is. So by working in a B2B space, we really focus on helping our clients figure out what is it that their customers are saving towards, and then finding really, really easy ways to make that saving kind of a part of everyday behavior through the aforementioned roundups. So that's saying when your transaction, your credit card is $6.35, well, we round that up to $7 and we put that 65 cents away for you, as well as merchant offers, which might be, you know, spend $100 with this merchant, get a $10 cash back. Rather than that being a discount, we put that $10 towards something else. And then the third layer can be something like employer accelerators, so employer supported savings. So, hey, for every 65 cents you save through a transaction, we as your employer might match 50% of that because we know you're saving that for your retirement. The big difference with Olive is that we really hate screen scraping. It's risky, it's dangerous, it's completely not understood by, I'll say Canadians, but I would say probably that applies globally. And the risk with screen scraping, with this sort of closed banking model, is that no one appreciates the risk till it's too late, right? So I'm going to say something, and someone will probably edit it out, but no customer of Desjardins was complaining about the security of their system until 4.2 million customers had their data breached, right? Data breaches and any kind of security issues like that aren't a problem until it's too late. And so where open banking has the potential to differentiate it, puts the control back in with the consumers to say, here's the information we're going to allow FinTech X or offer Y to access in terms of my financial data. And it really gives that control back. And that's really core to us. So we work directly with the payment networks, Visa and MasterCard, to get the authenticated data from there without needing an end user to log into their bank account or their credit card account for us to pull all that data.
That's a really, as you say, that's a differentiating model. And the other thing is you are going through other businesses to get to the real users of your system. And so even though you're quite an early stage company, you're seeing yourself getting ready to have it sounds like a period where you've got some substantial growth potential in front of you, despite our not having an open banking regulatory system or consumer-directed finance regulatory system available in Canada. What might that change from your standpoint? I mean, now with the consultations ongoing, what opportunities might an open banking framework open up for you?
Yeah, to be honest, it helps us accelerate what we're doing. Right now, we work directly with the payment networks to get that data in, let's say, an open banking mindset, if not a formal open banking model. As that model does get formalized and agreed upon in Canada, it makes it easier for us to find, let's say, to onboard alternative payment mechanisms such as prepaid cards and things like that. But it also makes it easier for other organizations, because I'd like to share sort of something I was reflecting on over the weekend with respect to open banking. For the last couple of years, I feel like a lot of organizations, governments, leadership have all said, there's a gap in financial literacy, and there certainly is, right? The question though is, do we need to approach that? Do we need to try to, quote, fix that? Probably. That happens at very early stages. But there's also a design principle here that says, how do we design for the way people actually behave? And the best example of that I saw recently was someone who had proposed getting rid of the flashing hand and walk symbols at intersection, and said, too many people are walking around with their head down, looking at their phones while walking, and we expect them not to crash into cars. Maybe we need regulations that say you can't walk and text. Well, that's fighting against the human behavior, right? We did those regulations in cars, and certainly a good thing. But do we need to regulate that people don't do that, or we design for the way people actually behave? And the way we do that, someone had proposed, well, what if we put the light signals in the sidewalk at the intersection so that the people who are looking down will still see that red sign? It's kind of a joke, but the actual principle of designing for the way people work makes a lot of sense. And so no Canadian consumer, and Oleg, I'll speak for the UK as well, they don't care if you use screenscaping open banking. They want that solution to work. So it's our job to build a solution that works, but also protects and kind of designs for the way people actually behave.
And design thinking, imagine a government or governments, which we have plenty of in Canada. Imagine if they actually took design thinking into the public policy process. What an exciting future we would have. There's no question. And Oleg, you certainly applied design thinking really well in your SteadyPay concept. I'm wondering, you have an open banking regime that's maturing in the UK without question. You've been leading the world in that regard. How has that worked for you at an early stage to get your company up and build traction? And are there things that you'd say that you'd be advising to us in that regard?
I think it's a really, really good question. And when we actually started developing our solution, as our first solution, as our MVP, we had to use screen scraping. And did it work? It worked, but did it provide the experience which people want and expect? Not really. And there is a number of reasons for that. There isn't so many services in the world right now, like Amazon, Netflix, which provide you instant gratification, and people expect services just work and work instantly. Long gone the times when you fill out the application, send it in post, and wait for weeks, and it comes back, and you go excited. It's like, oh my God, it was only 1 week. People want things to work consistently and work right now. Screen scraping doesn't allow to do that. Open banking does. And the interesting thing is, as soon as you start leading the charge with a new technology, people expect every single technology to be exactly the same way. So you start doing instant transfers, and people start thinking, well, why don't we get instant credit? Why don't we get instant saving? Why don't we get instant this and that? And people not necessarily realize that's different technologies, and they require different effort. And that's what's quite interesting, that you pave the way with a new technology, and then you actually have to live up to the expectation. And that's a good thing about UK and open banking. UK have been very disciplined about setting the original framework. So they set a really good framework, and they managed to rally all the big banks to participate, creating this critical mass, which allows this technology to be used. But that said, it's not necessarily that perfect. Some of the banks do not support it, or support it at a minimal level. Information is not consistent. So there is still a lot we need to go through. But I think what's quite interesting through open banking mentality in the process in the UK is that banks themselves started to understand the value it generates. Because if you think from the bank's perspective, they might say that, well, there is a regulation, we have just to tick the box because government tells us to. And if anything, startups will actually steal the business from us because we give access to the information. But that's a very incorrect thinking. Actually, by providing access to this information, they open the floodgate for innovation, which they wouldn't do in-house, but which they can use in-house. And that's basically reactive versus proactive thinking. And, and as soon as you change this mindset, that's, I think, where the magic starts happening. And that's where open banking adoption is going well. And it creates the innovation, the design-driven process, as you're saying, which makes and creates a lot of value.
I read an article in I think it was about a year and a half ago in Harvard Business Review, talking about the different corporate strategies of building moats that are wider and deeper over time, or building ecosystems. And the future is unfolding for those corporate entities that value ecosystems and value the delivery of increasing value through networking, through new providers to their customers, being that conduit, being that the way that customers find that great value. And I think that's what you've described for me is starting to be what's unfolding in the UK. Ramy, let's just go back to what's interesting about Olive in my mind is that you've designed it to accommodate the lack of open banking, an open banking framework in Canada, or a consumer directed finance framework, but you can then start to benefit when it starts to exist. You can start to benefit from that. So you're building a culture that says, no, we're not doing a workaround here. We're absolutely focusing on customer security right from the beginning. So talk a little bit more to me, if you could, about how open banking will benefit an early stage fintech in Canada moving forward, because obviously certainty around regulatory regime is crucial in any business as it's getting going. But just where do you see that helping the development of these innovative businesses and the innovative ecosystem in Canada around financial technologies?
Yeah, it's a great question, and I'm going to again share a short analogy here. And the reason for it is that I spend a lot of my time every week explaining to all kinds of different people what open banking actually is. And the easiest way I find to describe it is to say, let's say you download some new social app. I'm a cyclist. I use something called Strava to track how much I cycle every day, week, month. And I have the option when I sign up or log into Strava to log in through Facebook. And during that process, Facebook, after I authenticate, says, Strava's asking for access to the list of things you like and your past posts and the list of friends and your email address and your profile picture. Which of these do you want to give it access to? And I choose the ones, some of them might be mandatory, like an email address. Others might be optional. But the real question is, and let me just point out, I'm not a big Facebook fan, I'm not a big user, but why do I have better control over my Facebook data to tell some kind of third-party app or service what information I would like them to access about me than I do about my own banking?
Yeah. And
so the open banking equivalent is that when you sign up for a SteadyPay or something like that, it pops up and says, SteadyPay is asking for your past deposit history, your mortgage payment history, your auto loan history, your credit profile. Which of these do you want to give access to it? And suddenly the control is back in. And I find that analogy helps people understand. And I think that thinking that analogy through is also helping these other early stage fintech companies and all kinds of technology companies that they can better appreciate what that future might hold and how they can then leverage that data to create better consumer value propositions, or even SMB or enterprise value propositions that take financial data into a part of the equation without saying, and what's so frightening about screen scraping, and not to harp on it, is that if you do allow a screen scraping approach and you do log in, whoever you've trusted that data to typically gets everything. And there are certainly cases where that rewards app that might give you some sort of bonus when you shop at a certain vendor, they probably don't need to know your complete mortgage history. And in fact, you don't want them to know your mortgage or your auto loan payments. You just want them to see your daily transactions, maybe. And so that control and that sort of granular level that open banking one day will give us, I think will unlock all kinds of great new business models. But the analogy between moats and ecosystems is so well articulated that I fear that our quasi oligopoly of 5, maybe 6 banks in Canada are building those moats. But I think we will start to see that, and we'll see things like credit unions and upstart banks and challenger banks start to propose ecosystems that then challenge those 5 or 6 mainstream banks to adapt and to come on board.
Yeah, it's an exciting time, but I just love that description about being able to very precisely say what data you want to share, and then it may get to the financial technology company says, well, if you're not willing to share this, so we can't provide you this value, but they can then explain why they need to have access to it versus becoming a data hoarder, where they just grab everything, and the consumer's at the wrong end of a data vacuum, which is too often the case today, where all this data is being sucked up and you don't know for what purposes and how it's being used, and whether or not it's being used to your benefit. That's to me, that's the big key. Thank you. No, I like that a lot. Oleg, just looking at, you've got a far better developed system in the UK. Just looking at how open banking has helped you specifically as an early stage company, it seems you've got some great traction. You very clearly articulate your value proposition. You can deliver that with security to your consumers. Just how is the certainty around open banking? And I guess what's great is now is open finance in the UK. They're really moving to say, okay, what other services can we pull in beyond banking? Just give us some insight as to how that's helped you as a business, because there's I have some understanding there's a lot of challenges, a lot of things to manage as you're turning an idea into value that customers can get on a repeatable basis. There's a lot of moving parts there, but how has the regulatory regime helped you and its forward-looking nature?
That's a really good question, and we've been on a bit of a journey to actually arrive where we are, because not only we're a new solution which hasn't been done before, we're also using a brand new technology which has a lot of more questions. And actually in the UK, our financial regulator, FCA, Financial Conduct Authority, have been very helpful, and we actually worked with them as part of the accelerator program to figure out how should we regulate it, what should be our regulatory regime, what should be our confidentiality requirements, safety requirements, and such. Because I think the approach FCA has is a very mature and innovative, saying, you know what, innovation will happen. It's happening right now. And instead of us trying to put it into existing boxes or reinventing it, how can we work with the people who do this innovation to see how we can shape a much safer future? Because what Ramy is saying is actually very, very important, is that platforms and services such as open banking gives you a lot of possibility, but it creates a lot of black spots which you need to be able to navigate and regulate. And there have been actually quite a few examples over the last couple of weeks when there've been a new fintech or two coming up on the scene and trying to navigate this gray area, and FCA stepped in very quickly in a matter of days to actually communicate and talk about that and prevent any issues happening. That said, we're quite happy the way they work, but on the flip side, to what your Colin exactly said, is there are many companies who use the information in a certain way which people not necessarily know how. And don't get me wrong, they do provide some good value add and some product, but they might not necessarily need all this information to provide that. And there might be some different monetization mechanics. So I wouldn't say that introduce open banking and everything is great. There is a lot of things you will need to work through to ensure that it gives as much positive value and positive impact as it creates an opportunity for negative impact and threats as coming through that. UK is being a great example, but I think we're still yet to go through the learnings of where not only it can go well, but where it can also go wrong.
I mean, the reality is, in a world that's changing as rapidly as ours is now, in the digital era, there's no regulatory regime that's ever going to be perfect, or if it is, it's only going to be for a moment, because that need to constantly evolve will be there, and it's whether or not there's a willingness to do so. You do have a big advantage in the United Kingdom. You have the FCA, the Financial Conduct Authority. In Canada, we have dozens of regulators. And so we're rather envious of the simplicity of your regime in the United Kingdom, I got to tell you. So just looking at the pandemic in particular, Oleg, just to sort of close the loop on that, how has the pandemic changed things for you in your business in terms of increasing demand or changing what customers are looking for? Can you just give us a minute or two on that?
Sure, would love to. I think there are two main aspects which need to be taken into account. Number one is change in the behavior of customers and the implication on us as a company. People started realizing that things are not going to be perfect into perpetuity, that things will change and there are ups and downs, there are cycles in economy, and there are things you cannot predict, such as a pandemic, meaning that you need to be more conscious about your financial situation, about savings, about lending, about income, because things might change overnight, this black swan scenario. And I think people started realizing that and becoming more curious and conscious about what are the things and solutions which might help them when this situation comes, because it might come. And that's why solutions as SteadyPay becoming more and more important, because we provide this safety margin for not only day-to-day solutions, but situations like that. And people do need those. UK government, I think, have done a tremendous job at supporting self-employed, but it took some time. There was still a vacuum of 2 months between them stepping in and providing support and people losing their jobs. And those 2 months actually make a lot of difference because people have very little savings. And as we discussed at the beginning, I don't think situation in Canada is that different. So solutions like that and SteadyPay becoming more and more important in real-time scenario, because they do provide a viable alternative to government support and traditional financial institutions. And the second part is people becoming more open to using digital online, digital first solutions. We do not have an office. We do not have a branch. We do have an office where our developers and the rest of the team sits, but people do not see us. People do not speak to us on the phone, yet they trust us with helping them with their financial situation. And I think this change in mentality becoming more and more prominent. Because of a lockdown, people can't go to their banking branches. They cannot speak to many people on the phone, yet they're more open in using digital first and digital only solutions to manage their finance, which something we probably could not have thought about 5-10 years ago. And this is absolutely amazing, if you ask me.
Yeah, the pace of acceleration is amazing, and our regulators are going to have to adapt to that. There's no question, because what we thought we might have had 6 or 8 or 10 years time to make some regulatory changes just evaporated in the last 8 months. Estimates that we digitized at the rate of a year per month through the pandemic, and I think there's some fairness to that based on some of the data I've seen, where the trajectory of adoption has just dramatically changed. Ramy, I've just loved so many of the comments you've made, but I'm just wanting you to just focus in on those who are, the number of people in Canada that are millennials in particular that are really dependent on the gig economy. And that means that their life will be precarious from going forward. And how do you see us as as a country making sure that open banking or other tools, regulatory tools that empower the private sector solutions can really make a difference moving forward? Because there's lots of discussions about how we can protect gig economy workers, but one of the fastest way to get any change in a society is by empowering the private sector to do something helpful. And so how might open banking be used to address what I think is a growing segment of the population? And I just want to hear your thoughts on it, because you seem to think about these issues a lot, and I just think I could learn a lot.
Yeah, sure. So I think the first thing that is worth sharing is I tend to a slightly broader definition of the term gig economy than most. We've got this sort of mental model that tends to pop into our heads when we hear that term about Uber drivers and food delivery and things like that. But it's much broader than that. There is a growing network of freelance designers, and business consultants, and strategists who just, and I've been one of those, who just don't want to work full time, right? They like the challenge of working project to project and having the variety and having certain times where they would have some downtime. So I think options like SteadyPay are certainly quite interesting and start to speak to a broader thing, which I know it's an overused term, but it's the future of work. But I prefer that term versus gig economy. And the reason is it also encourages us to think about, well, how do the enterprise organizations, how do the nonprofits, how the governments who rely on this economy of gig workers, if we will, and how do we create the infrastructure to actually work with them more efficiently too? Because it's a two-sided coin. And you look at some of the largest companies in Canada, and they're not well equipped to work with, let's just say, freelance individuals. And I've seen that firsthand. I did some work with a mainstream consumer packaged good company. And in the process, and a short anecdote here, in the process of trying to hire a freelance individual for a $10,000 contract, my legal department at that company gave me a 46-page MSA that person was to fill in, and with all the legalese in it. And I thought to myself, but wait a second. And so something funny happened in that process. They had forgotten to eliminate one of the kind of fill in the blank parts of that MSA. And so the name of the previous recipient of that MSA was in there. It was SAP. And I looked into it. The same contract was used for a $17 million, the same MSA for a $17 million contract with SAP that this company decided they would use with a $10,000 project-based freelancer. And so I think that there's certainly very interesting analogies when we think about open banking, when we think about digital ID, that we could apply to the future of work to say, well, how could we or how might we better work with this individual or this small team? And so I think it goes a lot broader than that, but open banking is a big part of that solution. I think digital ID, which I know has just exploded in the past couple of months, especially in Ontario, but across Canada and globally. I think all of these together require government leadership as well as sort of corporate citizenshipness. Sorry, that's a made up word, but working together to say, well, how do we actually solve this problem? And to your earlier point on design thinking, I teach a course on design thinking at McMaster, so I get to see how students every semester kind of learn about the topic. But I think that empathy-led design to understand what really is the problem that we're trying to solve is crucial in finding kind of scalable solutions here. Your earlier question about COVID, I think from Olive's perspective, what it did is it shone a spotlight on the underlying problem that we hope that we can help at least put a dent in. I'm not saying that saving 50 cents or 70 cents here and there or getting the occasional $10 cash back is going to make someone avoid complete financial hardship in their future, but it's a part of the solution. And COVID showed us that something around, there's a million stats on this, so I won't go into the details, but somewhere around half of Canadians, when this happened, were discovered to not have 1 month of savings, right? 1 month of income, and they're I'm not going to say out on the street, but they're in really, really hard times. And that's terrifying.
Yeah, absolutely.
Shone the spotlight on that underlying problem and helped everyone kind of rally around it.
You demonstrate empathy and design thinking extremely well, and you know what I'm thinking about though is how things have changed for every company. There are a lot of companies that are not going to go back to having major offices anymore. And that means that basically every employee is a contract worker where you've got to evaluate their output rather than their physical presence. And it is going to change work a lot as we move forward, and it's going to be interesting to see how do we adjust to some of those issues. Ramy, thank you very much for your thoughts. Really glad to have the chance to learn about Olive and where you're at and how you're looking at how you've been looking at dealing with the absence of an open banking regime and how you're going to use it to grow your company into the future. And Oleg, fantastic to learn about SteadyPay. I just love the very obvious value proposition that presents to a lot of folks and how well you describe it. It's the sort of thing that I would love to see as a regular alternative to the payday lender option in Canada. People, if they still want to go down that payday loan option, go for it. But it sure would be nice if they had a real alternative that worked for them on a regular basis. So Michelle, I'm going to hand it back to you. Thank you for inviting me to have a conversation with Ramy and Oleg, and really enjoyed that a lot.
Yeah, thank you so much. It was such a passionate discussion and so many insights, I think, both from a UK and a Canadian perspective of things that we could take into account as we move forward. And I'm just going to ask one last question because I think it's so crucial. We're in the midst of so many things coming together to push Canada towards open banking, but yet we still have to come to a line in the sand and a roadmap. So looking at that, I think, Oleg, just from a thought from the UK, you guys are 5 years ahead of us. Investment dollars are massively growing in the UK. You guys have hit over 6 billion last year, and Canada's just hit 241 million. So as we look towards our goal of becoming a leader and being part of the world banking infrastructure, what do you think we can do to help us run forth? And then Remy, knowing that we're in our consultation and that digital ID from DIAC has started to test and that we've got new data right infrastructure being proposed, how do we get there now? Like, how do we run to catch up? So Oleg, I'm going to start with you.
Thank you, Michelle. I think the most important question and approach you need to ask is, what is the issue we're trying to solve with open banking? And go backwards from there. You need to look, and then when you identify this problem, look at best existing solution in the market and what you actually need to enable them. Because getting open banking for the sake of getting open banking is not going to get you far. It's more important to think, what are the solutions? What are the products you need to solve problems and problems you need to solve, and how open banking can help to deliver on that. Because if you do that, selling it internally to the regulator, to the actual ecosystem participants and end users is much, much easier, because you can straight away demonstrate the value you would like to bring and all the benefits to the government, to the society, and to the country you can bring as a result of implementing it, rather than starting, we need to open banking. How can we do that? Always think, what are you trying to achieve and solve with that?
Oh, such a great point, because a lot of the discussions here in Canada have come to the point of maybe we'll just do read access only, and we're not going to put write access in the roadmap. And what that will do, as I look to the future of all other countries that are ahead of us, it will just give us a check mark, but it won't give us the innovation or the accessibility to fintechs to build on. So Remy, I give it over to you with your AI background and your design thinking. What does the roadmap need to look like, and what do we need to actually run forth now, not later?
Yeah, with all due respect to Senator Deacon, I mean, governments aren't the fastest moving vehicles in terms of
think
right? But there's been one thing that makes governments and regulators move faster, and it's votes. Honestly, it's the voice of the people. And so to Oleg's point, I think that looking at the value we can create, the solutions we can offer to everyday Canadians, and to say, hey, you don't have to be at the mercy of, and I'm sorry to say this, but at the mercy of only the products your bank offers or approves or includes behind their paywall or behind their firewall. We need this. I think that the technical language on screen scraping, that's great for us when we want to all get together and nerd about this in FinTech land, but I think we really have to focus on the consumer and as well as sort of the business value propositions behind it, and then make it very clear that, well, here's what's holding it back. And I couldn't agree with you more. To read only is a check mark, but if we just aim towards that as a roadmap, we're going to be right back down this path in 5 years from now, having debates about, okay, well, how do now we get real two-way access from an open banking perspective? So I think that really articulating this in terms of consumer value propositions, business value propositions, enablement of new business models is going to be crucial in terms of making the case of why this is so important. And you're right, it's not just open banking, it's digital ID. All of these things are going to kind of come together in the coming years.
Oh, such a great discussion today, guys. I'm so thankful that the point we started with, that Canadians are 200 away from insolvency, even pre-COVID, and then having both of your organizations, Olive giving some of that saving power back to Canadians, and Oleg, what you're doing in the UK, and hopefully one day when we have open banking in Canada, you can expand out and give us some stability in our gig work economy. So thank you both for coming. Thank you, Senator Deacon. I'm really excited for this episode to go live and share the insights of today.
Absolutely. Thanks very much, everybody. Fantastic.
Thanks, everyone.
Thank you, everyone.